Right. Today, I'm going to talk about the Bank of Japan rate management, October to December 2025. What is expected of it, right? Now, the where things stand today, Japan's new Prime Minister Sanae Takaichi has signaled continuity with pro-growth, easy policy instinct. She has moved to compile a large stimulus package with government sources indicating the size will exceed last year's 13.9 trillion, which is about 92 billion US dollars to cushion household and back strategic investments. Now, her comments on aligning Bank of Japan decisions with overall government goals reinforce a dovish tilt, even as she stops short of dictating timing to the central bank. Now, the overall economic backdrop of the Japan is like this. For inflation-wise, September core CPI price rose 2.9% year-over-year, which is above the Bank of Japan's 2% target and among the factors for the late October policy debate. Now, two BOJ board members dissented at the prime meetings in favor of lifting rates to 0.75%, underscoring growing concern about price risk. As for the PMIs, October manufacturing PMI fell to 48.3, which is a 19-month low, signaling continued contraction. Whereas service PMI eased to 52.4 but remained expansionary because over 50 on resilient domestic demand. Now, the policy question for central bank is whether to move in October or wait for December. Okay, so what is expected from the Bank of Japan? Now, the October meeting falls on 29th and 30th, which is about 2 days from now. December meeting falls on 18 and 19. Now, former Bank of Japan executive Eiji Maeda argues that waiting too long risks a weaker yen and sticky inflation, and he points to side effects such as fast rising property prices in large cities. He also notes that by December, the bank will have fresher information, including the Tankan survey and wage signals from large automakers. Now, under that logic, a raise to 0.75% in December is plausible, followed by a later step to 1% around the middle of next year. Now, markets currently lean in the same direction after the leadership change in government. Survey shows a clear shift away from an October move and towards December or January next year. Sanae herself has not mentioned anything, not saying that no, she doesn't want the rate to increase. She just says that, these are some of the policies she's looking at, and her policies is to actually spend. Okay, they want to spend and ensure that the Japanese economy is properly supported. And because of this kind of statements, right, you can see, they expect money printing to come in for Japan, and you can see the stock market breaking 50,000 points for the first time today, right? Now, is the economy suited for a hike? The answer is yes, but with care. Inflation is running above the target and the labor markets remain tight. With services continue to expand, those facts support a small step higher. Now, at the same time, manufacturing is soft and a very large fiscal package is on the way. That argues for a measured pace, right? So the most consistent approach right now, right, is a hawkish hold in October, right? This is, to me, is pretty important. And then that sets up for December, and then a modest raise paired with guidance that future steps will depend on wages and underlying inflation. Okay, this is the expectation. Now, here are the possible yen scenarios when this happens. Okay, now BOJ hikes in October, dollar yen likely to drop sharply because the surprise narrows the rate gap fast, right? Guidance shapes what happens next. A firm message keeps the pair lower. A cautious message can allow a partial rebound, yet the upper boundary likely shifts lower. Now, if BOJ hikes in December, dollar yen likely to ease by a modest amount since markets already expect it. A strong message about future steps can turn this into a moderate fall. A soft message keeps the move contained. Now, Fed's cuts 50 in October and BOJ no hike. Now, dollar yen likely to fall by a moderate amount as changes comes from the US side and the broad dollar easing. Now, Fed cuts 25 basis points October and BOJ no hike scenario. Dollar yen likely to slip slightly or trade sideways. If BOJ holds rates but clearly signals a near-term hike and warns about inflation, this is a hawkish hold and dollar yen tends to drift lower. If the Bank of Japan holds and sounds patient about tightening a dovish hold, the pair stays mostly range bound. Okay. Now, Fed cuts 25 basis points in December and BOJ hikes 25 in December. This is a likely scenario, okay, that could happen. So in this scenario, dollar yen likely to fall by a large amount because the rate gap narrows from both sides in the same window. Okay, so be on the lookout for this. This is a possible scenario right now. Now, what to look out for going forward? From now till December meeting, watch a few simple things. The number one, does core inflation stays near 2.9% in the next report? Do services PMI stay strong enough to balance weak manufacturing PMI? What the Tankan shows and what early wage offers suggest for next spring? How big the new fiscal package is and whether it focuses on cost release or long-term investment. The message at the October meeting: if the bank holds but sounds hawkish, markets will assume a December hike and the yen will start to adjust before year end. Okay. Now, as a conclusion, putting it together, an October hike is unlikely, though a surprise move could strengthen the yen quickly. If you see that, yen is going to move much, much higher. December is the base case for small increase since inflation is above target and the economy can handle a step. Yen moves most when policy shifts narrow the US and Japan rate gap more than traders expect. And finally, the clearest way for that to happen is a December window where the Fed cuts a little and the Bank of Japan raises a little. That setup points to a stronger yen into the new year. Okay, so with that, that's the fundamental report for today.